This is Global Investor Radio. Just thought I'd do a quick update today. My cousin Kemp and my assistant here at Global Investor Radio says to me he's been receiving quite a few emails asking about the gold mining sector. And these are the stocks listed on the American markets. And I had a good look over them last night, and I'm recording this today at 2 o'clock in the morning Hong Kong time. It's 1 o'clock in the afternoon New York time on the 19th. And I just thought I'd go over these stocks, and I couldn't find literally one that wasn't in a solid downtrend. The last time I checked these stocks was spring 2013, as I was closing out some short positions on some of these companies. And I had a look over them at the moment. A lot of them are in solid downtrends or have either broken those solid downtrends and maybe at the beginning part of an accumulation cycle. But at the moment, there doesn't seem to be any accumulation or foundations that's really been built in any way that's solid to give you any kind of assurance that the whole sector is looking positive. And I believe the reason a lot of people are interested is because there's been a lot of emails been going around recently, like this one from Fleet Street Publications. I'm not sure if anyone's heard of them, but a lot of investors get emails from companies like this. Fleet Street have been around quite a long time, and I remember reading a newsletter from them back in the early 90s, and they've always had a contrarian type outlook. So I was intrigued to start reading this one. This bit here: if you follow the herd every time you move in the stock market, if you listen to the mainstream for all your investment advice, if you do what everyone else is doing, this opportunity is not for you. The greatest contrarian play since Soros sold the pound. How intriguing. So I read on a little bit, and I was thinking I was going to come across something that was contrarian. But in reality, the guy's talking about buying gold mining stocks. And obviously, if this is going around the internet at the moment, people are trying to whip up some enthusiasm to buy gold mining stocks. That's fine. I mean, they are negatively looked at by investors, sort of mainstream investors at the moment. And strictly from a fundamental point of view, they've been ignored. But the point of fact is, there is no accumulation. There's been no base in these stocks here on the American market. Not one of them really had any sort of decent formation. I'll show you this one, which was the best one I found, but that was the only one out of all these listed stocks in America. The rest of them, it's like catching a falling knife. Now, of course, a lot of them look to have reached lows, and others are still in downtrends. And this, for whatever reason, this guy thinks that the gold mining stocks will go up sort of very shortly. And what he's trying to do is anticipate from the fundamental information out there. And when you're trading, if you try and anticipate, it's often something that leads you down the path of total destruction. It's better to analyze the information, the price action that comes. And what I've seen with the mining stocks over in America is that, again, there's been no professional accumulation. I would say that they're at least a year or two before, I'm talking on average now, if you took the stocks as a majority, before they're worth looking at. And if you scroll down here, he talks about a couple of the reasons that he's very interested in gold mining at the moment, and one of them is the price being low. I mean, it's only low in the last 8 months. If you look at it over the last 13 odd years, it's been in a solid bull run. And then he talks about the Bundesbank wanting their gold back, and I believe the Americans have told them 6 years. But anyway, the point of fact is, that tells me nothing. The Bundesbank want their gold back. How am I supposed to trade off that? The world's biggest customer, central banks, he's talking about China only owning 3% of their gold holdings through their Federal Reserve. Again, how am I supposed to trade off that? Okay, you can try and prejudge what the Chinese are going to do. Remember, the Portuguese have huge amounts of gold. The Italians do as well. The Chinese, if they are willing buyers, can find a little source over there in Europe, I'm sure, to extract some of the gold, and some gold coming out of America and South America. And then he talks about the mea culpa, the Bank of International Settlements, the one that survived World War II intact. basically in June, they said that money printing programs are doomed to failure. Well, of course, I mean, most people realise that the Fed have backed themselves into a corner. It's a catch-22 situation. They're between a rock and a hard place. How many idioms do you want to give it? Things aren't looking good long-term for the Fed, but these things can take years to play out. The British pound, for example, in 1921, I think one British pound used to get you $6. In the 1970s, one British pound got you $2.50. So the British pound's been on a massive decline there over a big number of years, but it hasn't collapsed in terms of totally collapsing. You know, it just didn't happen overnight. It was a steady process of devaluing. Now, I'm not saying that that's going to happen. I don't know what's going to happen. I try not to anticipate. Of course, you can look at all these different fundamental factors, but I believe if you look at them all, in reality, what clue can they give you? The only clue that I'm looking for really is price action. Are people building up positions in the market? And at the moment, looking at the gold mining stocks, unless there's some sort of miraculous money printing in the next 2 or 3 months, and that money printing's huge. Now, I'm not totally ruling that out. Then yes, we could see some quite large rises in those gold mining stocks. But think about it from a probability standpoint. If you ran an insurance company and someone came to you with this opportunity and said that there was a 25-35% chance of something happening, who knows what the percentage chance Yellen's going to do a massive print if the market does sell off a little bit. We all know how they panic. But even if she does do, let's say a mediocre run of money printing, you're probably looking at the gold mining stocks maybe moving up 15-20%. I can't see anything being sustained because no one's been building longer term positions in those stocks, and there's still an awful amount of the public holding on to those market. And this is where another problem I had with this report, when he talked about it being the biggest contrarian play since Soros sold the pound. I mean, from my mind, the public are still set on gold. They love gold. You know, 10% of what you would call society in, say, America want the gold system back, and you know they're totally with gold. You know, they didn't sell out during the peak in 2011, and they've ridden it down, and they expect it to go back up, and there's still a lot of people out there like that. So in terms of being a contrarian play where everyone's negative on gold, all I'm seeing really is that the public are still semi-positive on gold, you know, in terms of the hardcore elements that went out and bought their gold bars and gold coins. So I don't think anything's changed there. So in terms of it being, you know, a huge contrarian play, it's not really. You know, in terms of the public holding a lot of gold, they do at the moment in comparison to say 15-20 years ago. And then he talks about the gold fixed price in comparison to where it was before. Now, the problem with that is if you look here where he's got the chart, the gold prices in gold, this is when it reached its peak in 2011. I remember reading a few articles around the beginning part of 2011 explaining how the gold mining stocks would rocket up to match the price of gold. You know, when it was bouncing around between 1600 and 1900, a lot of people said that the price of gold mining stocks would rocket up, and a lot of people didn't realise we were on the precipice of a bear market. And it was quite easy to see from this parabolic move and these wild swings of distribution. If you look at the gold chart, which we'll bring up in a minute, and I've talked about this before, but just because the price has correlated before doesn't mean it will correlate in terms in the future. And the only thing I can see here is that the price of the mining stocks have come right down and the gold price hasn't. And that could mean that the people who had gold and are looking to distribute their gold holdings have taken longer to distribute what they need to. That's why the price hasn't come down as much as the stocks. We could see the gold price coming down to match the low price of the gold mining stocks, and that's what I think is more than likely to happen. Whereas this guy thinks the price of the gold mining stocks is going to go up not just to meet the gold price, but he thinks the gold price is set to rocket sometime in the near future. And hey, I mean, if he is right, it will just be through luck in terms of probability. You can't make a fortune over 15, 20 years with that type of trading style. You just can't do it because you have to play the probabilities, just like a good insurance broker, as I explained before. You have to look at an opportunity in terms of the upside and the downside risk. And from what I'm seeing at the moment, the price of gold has a lot of downside risk, and the gold mining stocks still have a long way to flatten out. Some of them have started going sideways for 2 or 3 months, but that's really not long enough. Some of them are still in heavy downtrends as well, and a lot of them, I'm sure, when the gold price was up at these levels, were leveraging themselves to the hilt, which always happens at at a top of a market. Who knows if this is the longer term top? We could see gold building up a new bull market, but the point I'm trying to make is that at the moment there's no accumulation or price action to suggest that gold mining stocks are preparing for a huge rise in America. Now I'm going to check the ones in Canada and Australia, what this guy is talking about, but I can't really envisage a huge difference between American listed stocks and ones in Canada and Australia, but I will check. And I just wanted also just to show you the gold price as well. You can see where it went parabolic, the distribution, the spikes up, and lower lows. We've been in a downtrend since, and if you draw a line along here, it reaches the top of here, and we're in a solid downtrend if it sticks to that. I believe I mentioned 2 or 3 months ago that I was negative on gold. It's not something I would trade at the moment. My opinion is that it's going down, but as I was explaining before, like to have the mindset of an insurance broker. Paul Tudor Jones said it in his PBS documentary. He's looking for opportunities where there's minimal risk and maximum upside, and at the moment I don't like to be potentially unsure, and I'd see this as a bit of a gamble, but I am negative on gold, and I do suspect it's heading down to the 900 level. It's building up a bit of momentum here on the downside. It's had what you call maybe a short rally, and it's come back down again. If it is to stabilise and Yellen is to print a lot of money, then we should see some movement up to around the $1,400 level, and perhaps some flatlining action around here. And again, price action perhaps will make me change my mind, but price action always gives you a clue. If you're aware to what's going on in terms of the price action, it will give you that clue. You don't have to anticipate and take huge gambles, and buying gold mining stocks at the moment I think is quite a huge gamble, especially with gold down at these levels. And if it breaks this pivotal point here at 1200, I can see this market moving down to the 900 level in the next 6 months to a year, and to me that looks like it's going to happen. And I'm just clicking on the 25-year chart here just to show you what it looks like, and the guy in the newsletter is recommending basically buying gold mining stocks when gold is at this price here. And I mean, if you look at it in comparison to the past, yes, it snaked along for a number of years and it deserved its huge run up, especially as the devaluation of the dollar went ahead over that decade. But you have to remember, as Jesse Livermore said, the markets work in the future. The Americans can't keep devaluing the dollar, and again, if the word comes from the higher ups that they have to tighten the taps, then we will see gold collapse, I believe, to around the 1900 level. But for me at the moment, just strictly from a technical price action point of view, I believe the odds are that gold will dip below and move down to around the 900 level. And what we might see is some of the gold mining stocks just snaking along the bottom, not really doing anything, just either accumulating or in downtrends. Sometimes it takes 2-3 years for a stock to build up the power for a move upwards, and gold I think has got a good chance of coming down to 900. We've seen lots of downtrends in cotton, coffee, severe downtrends, and I don't see gold being any different at this present juncture. But again, the price action, I will change my mind if I see different price action. But as it stands now, in terms of money printing, I really don't know, what's going to happen in America. I can't see her doing another round of money printing, and if they keep the money printing at whatever, I think it's at 85 billion a month. If they keep it at that, look what's happened to gold during that time. So they would have to increase the money printing massively to make any sort of dent in this gold price as it is at the moment. And anyone looking to go long at these levels, perhaps needs to think twice. And also a little flag on the horizon for gold lovers recently in the last year and a half is the rise of Bitcoin. A lot of people, the more you look into it, I mean, don't just judge it off what the mainstream media say, but look into it yourself and make your own opinion. But the more you look into it, the actual reality of it being a viable currency makes a lot of sense. And the algorithms associated with Bitcoins and how it's structured in terms of limiting the supply of the currency, the breaking and down of the bits of the Bitcoins as well, it's all very well thought out. And I think a lot of people that used to be very keen on gold now realise, the younger generation I'm talking about, say from 16 to 26, they much prefer the idea of something like Bitcoins, in terms of popularity, and that's what life's about sometimes: currency, confidence, popularity. Bitcoin's got it all. Of course, the government, the regulators might come in and ruin it. We've already seen Senate hearings this week in America concerning it. Ridiculous assertions that Bitcoin is a conduit for money laundering and stuff like that. I mean, where do they get off saying this type of stuff? I mean, it's the same with cash. There's nothing different. There's nothing wrong with Bitcoin as well at all. So it's something I highly recommend looking into, Bitcoin, and that may add some negativity to the gold market if you're looking at it from a fundamental side as well, because people are seeing alternatives out there at the moment. Okay, and I just wanted to cover this stock quickly. This was the only one in the gold mining sector that had any sort of base in action or any sort of flattening out pattern of any length of time. It's got a curve action. Nice bits of accumulation action here where it's gone from 5 to 8 and it's come back down again and it's gone up, really testing people's patience. And again, I wouldn't be touching this market until this downtrend was broken. So this gradual downtrend, if you are dead keen on the gold mining sector, this was the only stock that I could find. And if you draw a line along there all the way, once it breaks that, probably at around the $6 or $7 level, that's when we'll see the technical position of the market change. Who knows, that could be 6 months, 3 months, a year away. And always we're ready for surprises, from the Federal Reserve if they come next year. But I really think at the moment a lot of people are convinced, and I really respect people like Mark Farber and other people, but they're really convinced that there's going to be quantitative easing 1,000 and it's going to go on and on and on, and it might well do, but I just got the feeling that, in terms of quantitative easing, it's over for the next year or two. Maybe I'm wrong about that, but in terms of making money, it really doesn't help at all. You don't really need to know any of that rubbish, any of that stuff. Sometimes it's better not to clog your mind up with it at all. Knowing what the Federal Reserve are going to do is pointless sometimes. People still made money in the 70s when interest rates were 15-16%. People will always make money, companies will always make money. The world won't end, and I don't see why they're so scared, in terms of the market, panicking every time they threaten to take away the taper what they're putting into the market. The market panics, and then the Fed panic, and they carry it on. And of course, there's always a master plan. I'm not getting suckered into believing that everything happens in terms of them reacting to what happens in the market. I'm sure they know exactly what they're going to do in the market 2 or 3 months ahead of time. Not particularly the Fed, but the people at the BIS in Basel and other types of big institutions. Okay, I've got to sign off. Battery running low. Have yourself a good evening. Take care.